Here we are. Good morning, everybody. Good evening, good afternoon, wherever you are on the planet. This is DCA Live. We're trying something completely new. So we're all streaming to our own channels at the same time. So fingers crossed there are no technical glitches. Gents, how are you both?
Doing great, man. How are you?
Absolutely fantastic. How are you?
Excellent, excellent. It's been an interesting weekend. Okay, I got a little echo going on there. Yeah. There's maybe a replay happening in the background. Interesting weekend. Just in the past couple of hours, Bitcoin shot to 65.5 and fell to 63.5. The $2,000 swing in minutes. Any ideas what's going on, Mando? What's your take on the markets right now?
Yeah, I think there was a FOMO buyback, which kind of happened since Thursday. Really, like when you had that big outflow figure, and then you had Mr. 100 coming in and buying. I think it was something like 4,000 Bitcoin, right? It was something huge that he came in and bought, and then you saw big inflow day on the ETF, and then importantly, you saw the jobs figure was showing a slight weakening in the US economy. So you just saw macro rip back, tech stocks rip back, and then it became apparent that people have really de-risked, I think, on that move down from 72 to 50, whatever, 57 it was. And so you had this like FOMO buyback in, and now we kind of came back up to 65 very, very quickly. So kind of a 10-15% swing back in Bitcoin in just a few days. And then today you saw we basically were rallying up until the headline today that the SEC is going to give a Wells notice to Robinhood, which was kind of unsurprised, but it was just something to take the wind out of the sails of the rally.
It was an speaking of the Robinhood stuff, there was an interesting post made by, I think it's Ryan Sean Adams, who is both a hardcore Democrat and an ETH maxi. And it was interesting about him is he's basically said, we've asked Democrats in Congress and the Biden administration to rein in this lawless SEC, and they've done nothing but further enable him. They're letting Elizabeth Warren's anti-crypto army direct executive actions and policy, going after everything you can imagine, literally walking into the hands of the Republican narrative of deep state control by trying to control the deep state. You're taking the option away from people to invest in whatever they want, and you're putting all the business in the hands of BlackRocks of the world. A lot of people were very upset about that. Any thoughts on that situation? CTO first.
I mean, I've always found it so difficult to understand this kind of idea that you should limit what people can invest in. Like the whole idea with accredited investor based on wealth. Like if your dad was rich, you are permitted to buy these things. But if your dad was poor, you are not permitted. I feel that the whole basis for that principle is so dumb. And it was one of the things that I really loved about crypto, that it is really inclusive, that only your brain matters and everyone's on the same playing field. If you live like in a poor rural area in Pakistan, or you work on Wall Street, you play on the same playing field. Everyone, it is really permissionless. And now I feel that this is kind of, they want to claw back on that it should be back to private sales by accredited investors, and everything is a security, and we should lock people out, and it should kind of be back to the old system. And I feel that all these things happening is kind of elements of that, and I don't like it, I must say. That's my only take on it.
Mando, deep state or not, or is it just people throwing mud?
Yeah, no, for sure. Like I think it's crazy that you limit these sort of investments for people. You have to understand there's massive vested interest, right? Like BlackRock, everyone talks about BlackRock's AUM, but that's actually the AUM mainly of US users or users around the world. Like they own mutual funds or ETFs. So it's basically an accumulation of everyone else's money, which they get to manage and take the fees from. So if you say to them, oh, you can only invest via us, that's massively beneficial to all these financial investment companies, which have massive sway in like funding for all these different politicians. So if you were to come in and say, hey, we're going to democratize investments and things, and we don't need all these investment managers to do it for you. That probably puts a lot of these people out of the job, takes away their revenue. Therefore, it hasn't happened. So yeah, I think it's just a classic case of regulatory capture.
It's pretty terrifying. I mean, from an alien looking down on Earth, you imagine there are somewhere between 40 and 60 million Americans that own crypto. So, from my logic, you denying them the ability to own crypto, the ability to buy and sell it and trade it, etc., and have a chance at freedom, you're basically hurting yourself in any election cycle. Fair to say?
Yeah, it's a weird thing to do ahead of a cycle. I think. Like I don't really understand this current administration with some of their things before going into a new election. Like they basically announced potentially a 45% tax rate in the capital gains tax rate in the US as well. If some of this goes through, that was like in Biden's proposed taxes. If like all his proposed taxes were to go through, it could get up to like nearly 50% on capital gains tax in the US, which is just a crazy kind of isolating thing to do going into an election. Like I don't think anyone thinks that's a smart way to move forward. So yeah, I think I've been surprised because it feels like they're shooting themselves in the foot.
Let's talk about the violent week we just had in the past. I know you touched on some good things, Mando, but maybe CTO, you can pull up a quick chart here and talk about exactly what happened. Here's the chart, because Mando correctly said it was like FOMO times. Everybody saw the massive selling, nearly $600 million flow out of 9 ETFs, massive dump by Grayscale. And then Mr. 100 did buy 4,500 Bitcoin in 22 hours, by my calculations, a massive bag. And at the same time, you got the new Hong Kong ETFs. They bought, 500 or so in one day, which is, it's not huge, but also when you look at the amount of daily issuance, it is pretty huge. And then you have other people that kind of buying the dip that missed the boat. But how do you view all of this, CTO, from your charts and the violent swing? And what is your point of view?
Absolutely. So right now, this looks like a classic trap. Call it bear trap, meaning that you run price below the current support, below the current lows, and making it seem like there is a real break in market structure, causing people to open new shorts, perhaps. And then boom, you run the price back. That's a classic bear trap. And right now the chart looks exactly like that. So that's my current take on it. And we see it perhaps even clearer if switching to weekly candles. You see this doji here, this long wick down on the weekly that quickly reverted. So if looking on the weekly candles, you can't even see any break on support. And I think another thing that really contributed to the recovery, as Mando said also, so we already covered it, but just to see it in the chart also, that yields hit the support level. This level here, hit the resistance level. So this level here was the resistance for yields, and the 2-year yield hit almost exactly that level. And then last week, it rejected from there. And when yield dumps like that, that usually gives a upwards move in speculative assets like Bitcoin and stocks. And that for sure helped Bitcoin get this recovery candle back. And so the trend hasn't turned down using the trend proxy that I use. It seems like a bear trap. What would change this, in my opinion, is if we get new lows. If this low here at 56,500, if that doesn't hold, that would change the picture. Then I do think that there's a good chance we get to the next volume node here, at least, which is at 52K. But if it doesn't, this looks like a bad trap. Price is back in the range. The trend never turned down, and it looks fine. And that's the level for invalidation for me now.
Yeah. And we had another dramatic event as well last week, and I'm sure, Mando, you saw the change in M2 money supply. And at the end of the day, the old expression is, it's the liquidity, stupid. Liquidity floats all boats. What's your take on some of the liquidity action we saw with the M2? We know the BTFP program shut down, but there's massive bond issuance and a huge bond auction. I think another 60 to 80 billion happening this week. I'm wondering if anybody's going to buy it. Mando, tell us about liquidity.
Yeah, super interesting week yesterday. Last week for all that sort of stuff. We were speaking about what was going on in Japan as well last week, and people were getting worried about it. It's kind of crazy, I think, what actually went on. Like, you saw two big interventions from the BOJ. They came in, they sold, I think it was something like 70 billion worth of treasuries, and they bought back the yen. And just so happens that week that we see the Fed suddenly turn more dovish. We suddenly see a lower jobs figure than we've seen in many, many months. And we see Yellen calling up Japan and being, hey, stop selling. Like, we're not going to raise rates. We're not going to raise rates. So the US, if you read between the lines, they basically decided, and you could say that they made all this employment data, like, they do massive revisions all the time. Like, I think the US decides what they want to do with policy by directing what those figures can be. So I think what they decided is they can't raise rates. Therefore, they need to make the employment figures look slightly worse. Japan basically had them up against the back of the wall by dumping all these treasuries, and Yellen was kind of freaking out and saying, stop selling. So then you saw this massive rip, which happened on Friday. Bond yields went way down. Everything started rallying because everyone knows that the Fed can't raise rates. They're just not in the position to be able to do that. And there was Yellen also in the middle of the week announced that she actually kept some of the funding the same, but she did announce a small bond buyback, which is the first time I think it's been done like 15 years. So it definitely, they upped the liquidity in the last, or they are signaling they are going to up the liquidity in the last week. And I think if you read between the lines, it was really because they realized that Japan, South Korea, China were all going to keep on dumping treasuries on them, and they can't let that happen. So they manufactured the data, and the Fed suddenly became dovish within a week. That's how I kind of read between those lines.
Yep, crazy times. It was actually the first time in 22 years that they've done that type of buyback. So it's a very historical moment, and it shows you they see the cracks in the system. They see data. Like, if us here on the outside see data and we are alarmed, can you imagine what they're seeing before they start cooking the data? It's pretty crazy. So net, where are we? A lot of people are very concerned that the bull market's over. We have that left translated cycle. Second, we're going to crash further. Or third, we're going to go to the moon by July. I'm going to give this to CTO first. What is your projection by the end of July, 1st of August, where we go next? Sideways chop, down or up?
Yeah, so I have obviously no idea what the market will do next. I wish I could predict the future. Sadly, I can't. So I have a very simple strategy. I will be using this reactive approach that right now it seems great. The market, we're above support. The trend didn't turn down. It looks like it was a bear trap. I added position at 50 to added exposure 57K something. So it looks fine. But if the market structure changes, then okay, it's a different case. I will take different action. So that's my take. I don't know short term where it will go, but most congestion periods, this is congestion periods, they resolve in the direction of the preceding major move, which was up. No one missed it, right? So the preceding major move was up. There is congestion, of course, that could be a turning point in the market, but most of those periods, if looking statistically, they continue. So if it was a congestion after a move down, probably the next move will be down. But now the previous move was up by probability. There's higher probability from a statistics perspective that the next move after the congestion is resolved will be in the same direction, which will be up. So, but of course you can't predict. So that's the thing. We have to kind of take in new facts if facts come along. But as of now, that's my analysis, and I continue having long exposure. I have not thought about shorting or whatnot. No, I haven't.
Yeah, we also had a new piece of data, which is If history repeats, Bitcoin doesn't breach the 200-day moving average during a bull run. We just broke a new 200-day moving average on Bitcoin at over $50,000. That's the highest it's been since 2021, if I recall, which is big news. So obviously, as time goes on, the 200-day as a moving average, pulling in all the data, goes up, and that's a positive sign. So a lot of people were hoping for us to hit that 50K. It's very rare that does happen. I'm much more about the short-term holder cost basis, which is now 59,500. That's the floor. But again, you get these news releases that say somebody in the government is going after telling the SEC to file a Wells notice against Robinhood, and the market tanks. And then it goes back up again after they digest the news that it's a nothing burger that has been going on for years. They've set I think all the SEC does is fire Wells notices all over the place. Mando, what do you think of this 200-day? And do you think we'll rebound tonight? And remember, this is a new asset class that's harder than ever, and more money is coming in than ever before. There's just too many buyers and not enough sellers, maybe.
Yeah, I've been surprised that since the ETF, I feel like volatility has really gone up, and I thought it would go down. I thought we'd start to see, it would start to soften, and actually we've seen pretty violent moves up, down, and that's really shaken out a lot of different people. It is difficult to work out, like, if this is manipulation. Like, I was speaking about this earlier, but BlackRock manages multiple times in trillions what the current crypto market cap is. And everyone is looking at those inflow outflow figures for what's going on. Like, we saw a massive outflow, we dipped, and then the next day, huge inflow, and we kind of ripped back. Like, it's very easy for them, in my opinion, to kind of manipulate this sort of stuff. The only thing I did on that dip was I bought Solana because it put in a higher low, or at least it did on the futures. And I was like, that was a good thing to buy. And I texted you guys when I did it. It did dip a little bit more since that happened, and then it went up since then. And I took it off because it was just like a short-term trade. But I kept all my other positions. Bitcoin, I feel like could range here a little bit. Bitcoin notably put in a lower low. And that normally requires some strength to kind of get it back. But this FOMO makes me think again that people are underinvested. They're underinvested to an asset class that if it starts to see inflows again, and we spoke about this last week, narrative follows price. Very, very quickly, you can build a very bullish narrative for Bitcoin here. And it did feel like that shook out a lot of different people. I did not buy the Bitcoin dip. I only bought the Solana dip. I'm still going to be looking at Solana, I think, for the main thing I'll buy on these sort of dips. The other thing that we said about last week was that, this was a really good opportunity, because if you had bags that hadn't rallied all year, all of these narratives were down 40, 50%. And you could have switched last week into some of these narratives which pumped back, Solana being an obvious one, but there are other L1s that pumped relatively strongly as well. So I thought that was a really good opportunity. I don't think that's there now. Like, I think it'd be, that would be a more difficult trade to do here. I would be very, very unsurprised if we have another retest down to like the low 60s. But then I do think we could continue to push on. I don't think we're breaching up towards 100K. That's one thing I don't think. I think we're probably here now, ranging for a little bit. It feels as though with all the new entrants, we still need to shake out enough people. And I think, I don't know. Like, I still think there's still that little bit of fear in the market, which means that we can't fully push forward. But I don't think 100K. I think we could go back to 72K. So that's as bullish as I can be over the short term.
And there was a big short squeeze on Solana just happened actually this morning too, because it did break out above.
I can just add one thing that I observed also to reinforce what Mando said. I felt there was a lot of anger in the market on Friday when price actually pumped back. And that leads me to believe just what you said, Mando, that probably a lot of people are under-invested and bet on that this dip would go lower, because it really seemed like a break of support. It seemed like, okay, it's going to be the first real dip. And then, boom, it just reverted back. And I saw a lot of people very angry that day. So I agree with you.
I think you're muted, James.
You did mention something about BlackRock, which is very interesting. And one of the things that I noticed is a perfect, literally almost picture perfect grayscale IBIT coordination. Grayscale dumps, BlackRock accumulates. And then we had that big twist last Friday where Grayscale actually added 65 million, had a positive day for the first time ever since January 11th. Do you believe there is some collusion happening behind the scenes? Because I've never seen anything this inversely perfectly correlated before in terms of the movement of bags from one play to another. And the stories that, well, they have a sidebar deal to keep Barry out of trouble. And I don't know, it could be allegedly all fake news you read on Twitter, but I thought this was interesting. Any point of view on this?
Oh, very, very interesting. My take would be that people simply move exposure from GBTC to IBIT, and that's what we're seeing in this chart. But I don't know. What do you think, Mando?
Yeah, this is a difficult one to say that this is collusion, because I feel like there's no incentive for BlackRock to save GBTC. Very, very little. Like, they're a competitor. So I think this is just funds moving from one to the other. I do think that these firms have a lot of power. It's not just retail inflows that are going in here. It's a lot of institutional funds which they help manage. So if they want to get something lower, they can manufacture a lot of this, because you see, they know that all these, I mean, I think it's even been documented, there are huge orders going through the moment those ETF flows get announced in Asia. And I think like there was even some restrictions on some of the funds that were going into some of the Asian exchanges because of that. So as soon as that gets announced, they know it's either going to pump or it's going to dump. So like there's a lot of weird power here. And I know this from being in like being in regulated markets. Sometimes you get like people who can abuse that sort of power. Like, it's very, very easy to see this is the number one metric the market's looking at right now, and we can maybe even manipulate things a lot higher and lower. So I don't see this as the manipulation. I see the manipulation that could happen internally at BlackRock.
Another top question here for everybody. This is top of mind, and we hinted at this before. And Mando, you mentioned you put your risk on with Solana on the dip. And I was myself moving stuff around last week a bit too, including MicroStrategy. And but what are your projections? A lot of people are, again, we mentioned before, this is a top concern that the market has out there. When would we start turning into a bear? You believe, Mando, sideways chop for the next couple of months, no big breakout to 100K, but you do believe 100K is on the cards, maybe 120. Some people say 150, some people say 250. But what happens? What is your strategy regarding Bitcoin and alts? It sounds like you're a little bit like me. You've got a hodl bag, and then you have got your speculative positions out there. What's your take on this? And then we'll go to CTO afterwards. When would you move either between Bitcoin and alts? When do you believe alt season would start? And then when would you believe you'd have to move into stablecoins?
I'm not a big believer in alt season this cycle, or at least much less so. The alts that I tend to buy are ones which have shown adoption this cycle. So I'm very, very wary of buying into altcoins which don't have, lots of users or seeing huge TVL growth. I'm not just buying into narratives of altcoins at this stage, waiting for the bull run to come. The bull run is happening, and if your altcoin has not moved, it's because you own the wrong altcoin, in my opinion. So I'm definitely not buying into narratives that haven't been working or haven't seen adoption already this cycle. In terms of where I think Bitcoin can go to, I think Bitcoin can go to 150 to 250K. My view is consistent. I think this isn't just a left translated cycle. I think this is going to be a longer cycle. I think adoption like this means that you have a softening of the cycle. Even though we've seen increased short-term volatility, I think you probably could see an extended cycle as more and more TradFi wakes up to inflows into Bitcoin. This is a long-term narrative, which is debasement of currency. You see China buying gold more than they've ever bought. Every single Asian economy, even the US, right? Like I think Costco's selling whatever it is, hundreds of millions of gold bars every single day. That is a long-term trend. And I think that you've now got better rails to see those sort of inflows into crypto. So my view is that we will, if you want to call this a cycle, I would see 150, 250K, but I think it it could be over the next two years. I don't think this is going to be a flash in the pan. This is all over. I think you have to be prepared to see big drawdowns, like 30-40% drawdowns in Bitcoin, and still it can be called a bull market. And I think that's what we will see. Like I said before, like there are certain moments where I'll always have a position. I think it pays at all times, and COVID is a prime example of this. Like to always have some money in stables. Like you can never predict black swans, and there's always people always say you should always be fully invested. I agree with that to a certain extent, but there are over even the course of my lifetime, there have been several moments of black swans where if you had money on the sidelines, you were able to basically 3 or 4x that money within a few months, playing pretty safe assets. So I always like to have a little bit in stables, like 10 to 20% basically. So I'll always look to buy back at that point. And then, yeah, it's really, when I talk about my spot risk, it's really between the majors, or I've danced a little bit in some other stuff, but I sometimes I'll use like leverage, and I'll decide when I want to dial it up in that way. But right now I'm basically all in spot, and it's mainly in either altcoins which have seen adoption or Bitcoin, and I think I'll hold that for a while now. I don't see any reason to necessarily to change that. If we'd seen like a big crash through, I would have reduced some of my Bitcoin just because I felt like it was a lower low, like I said. But we didn't really, and we just kind of hang out at 57K. But yeah, I'm happy with my positioning.
So much to unpack there, which we don't have time to unpack at all. But boy, I mean, you hit on zombie coins and allocations and everything else. I'll tell you both a fun story. I was actually on the phone in December 2019. A friend of mine, their sister lived in a place called Wuhan, and I moved to cash, and I deployed it all pretty much on one day in March. So if you know, it kind of shows you that retail investors can have an edge if they have the access to the right information. And I also believe always have at least 7% cash, so you're dead right there. CTO, old season, are you a believer, or do you believe this cycle is different? Do you believe there are zombie coins that will never go anywhere and people are still sitting on them, but other coins have actually rallied, and we saw a huge outperformance today of one coin? What's your take on?
Oh, absolutely. I can share this. Does it still appear, the slide? Yeah. So this is the Bitcoin dominance. And this whole cycle so far, from basically November 2022, Bitcoin dominance has been increasing, and it's still in uptrend. It did hit the resistance, retraced a little bit, but it's still in uptrend. We have not seen any of this that we saw during 2021, where all altcoins just rallied, and didn't matter what you bought, it went up so much anyway. And versus BTC, versus USD, everything. We are not in that situation now. It has not worked to just randomly buy some altcoins. That has not worked during this cycle. Of course, Ethereum is a big part of this index, and that has done very poorly. But even without that, the situation is the same. So it's exactly like both of you said. You have to be very selective. It doesn't work to just randomly buy altcoins and so on. It has not. They have lost against, if not against dollar, they have lost against Bitcoin, most of them. And there's been a few notable exceptions only. So it's still the situation is the same. It requires a surgical approach if venturing into the altcoins here. A lot of people got very excited with meme coins, and it seemed like everything went up 100x and so on. But a lot of those people have given a lot of that money back already now. And many of those actually didn't make any money in the end, because they kind of, even if they got a good entry in the beginning, they bought more later when it had gone up. They were slow in the start, and by the time they worked up the courage to buy with big position, that was actually the top, and then it retraced 50% or whatever, and they ended up in a minus, even though maybe price was up 100x from when they bought the first position. And coming back to your question then, James, or the question from the audience there, that just like Mando said, I think position sizing is a very powerful tool. During periods where everything is clear, okay, then you go big position size. And during periods where it's really unclear, you can have a little less position size. It doesn't have to be binary. You don't have to be 100% long or 100% in spot or 100% in shorts the next day, and then the next day 100% in long and so on. It's fine to have like a little bit smaller position size, have some position in cash or stable coins in case there gets a dip. You can take advantage of it, and that's how usually I reason. This isn't for everyone. Some people want to take higher risk. Okay, then if they're trading with little money and they have a salary every month, and it's fine to blow everything in May because next month I would make it back on my salary. I can, blow it again in June. Then it's different. But if it's a lot of money, if you feel some responsibility, personally, I'm fine to have less percentage upside, but have a high confidence that I slowly and surely grow the portfolio. So that's my strategy. Then I take a more defensive approach. Someone else who is maybe younger could have a different approach to that. But I'm a big fan of position size, and where situation is a little bit unclear in the market, perhaps I reduce, and then as it clears up, we get a breakout or something, add back more of it in. So that's my take on that question.
Mando, and I know you had a couple of things that you're looking at today before we get to some other questions, which are super interesting. You had a little short, punchy list of, the strongest bounce back, some deep in projects led by Arweave, etc. Would you mind sharing a little bit of what you're looking at right now, what you find interesting in this market?
Yeah, I think you want to see what bounces back strongest on a period like this in altcoins. That's often the stuff that you kind of want to buy. But you definitely saw out of the majors, let's say the three majors, Solana moved the strongest. So it basically bounced 25%, I think. It hit like 120 or maybe even just slightly lower than that, and then bounced all the way up to 155. And it's now kind of hanging out around there. So decent-ish move there in Solana. So I think that kind of tells you that even if we dip again, that's probably the coin to buy. Interestingly, some of the major meme coins also moved strongly. So people have been following them. Smaller ones didn't. So I think you've got to focus on which ones if you are involved in that space. And then, yeah, you saw some of the deep in stuff move. You've seen Arweave move, which has been fairly strong, but various different deep in projects actually moved pretty strongly off the low. So maybe that could be the next trend. There's also been a bit of a move towards, I think we maybe brought it up with the Friendtech airdrop coming out. Like that was on a lot of CT's lips this week, SocialFi as a potentially a new trend. And that's kind of being led by DGen, which is a L3 chain, and also by Friendtech. We'll see how those two move as trends, but that's what I'm looking at right now. So L1s, which are performing, which bounced relatively strongly. The ones on my shortlist there are Solana, Ton coin, which is a Telegram coin, Near, and one or two others, and then deep in coins. It's kind of a small list there, and then SocialFi and some of the Rune stuff that we were speaking about as well before, which is the stuff being built upon Bitcoin at the moment, and that's slightly more esoteric. Like you need to really understand that, and it's not the easiest thing to get involved in. But yeah, those are my spots of interest at the moment.
Interesting you mentioned Toncoin. The All-In Pod team said that's next in the sights of the US government after getting rid of TikTok. They're going to get rid of Telegram next, shut them down. That would have a huge impact on the play, no?
Yeah, it would actually. Yeah, it is a very good point. Obviously, Telegram had a Russian founder who lives in the UAE, I believe. So there's been talk after the TikTok ban that they could move very similarly and say, we don't really control this social media. It's obviously got links back to Russia potentially. I think they have proprietary control over their algorithm, their encryption algorithm as well, which could be an issue. Who knows? I think that's probably speculation at this stage. But yeah, the TikTok ban doesn't set an amazing precedent for foreign companies who start to dominate in the US. Even though I kind of agree with that as a ban. But yeah.
CTO, any narratives you're looking at right now? Any hot sectors?
Can I first show just one thing on the Solana chart? Because I think it's very interesting, and I know a lot of people are interested in the Solana. I'm a huge fan for most altcoins. all altcoins, actually. I'm a huge fan of the altcoin to BTC charts. Many of the altcoins are much easier to analyze there because you filter out a little bit of the volatility of Bitcoin as such. So sometimes it's hard to see what's going on the USD chart, but if you switch to the BTC chart, it's much clearer. So for Solana, the clear support level was 0.002, and that held. And that level goes back to a long time. It was resistance, then it was support, and so on and so forth. So that level held very clearly through this volatility that we had last week. And I think that made it much clearer. And if we're looking at exactly now, we actually have a confirmed double bottom in the SOL to BTC chart if price closes here. You can see this level here. There were two bottoms there, and now price has just crossed the high between those two bottoms. And so yeah, it's looking really great. So I just wanted to mention that sometimes it's easier to chart altcoins on the BTC chart. And yeah, I think Mando really covered this. I haven't really changed any mind. I think it's similar narratives as we had before the cycle. Add maybe gaming, and yeah, I think AI will continue to be a big narrative, though we don't have so much real world usage in crypto. We haven't really found the actual synergy between crypto and AI yet. It's more narrative. It's more like you put AI in the name and so on. But I think that could still come. So that's one thing I'm looking at. I think AI will stay with us as like a society transformation for the next several years. It's not just like a fluke. No, this is going to change the whole society, and we will see it in Tesla, as James has talked about many times. We will see it in all sorts of industries, and people will keep getting shocked, I think.
We should just warn people again, the next 2 years, we're going to see absolutely radical changes in how the world operates. It's that simple. A lot of people have, Amanda, I saw you maybe popping something up. You guys have full control over where everything else works. If you see an interesting comment, flash it up. But a lot of people also want to know, we now have a good idea of your crypto positions, but a lot of people are also very interested if you have exposure to stocks per se. I know that I'm heavy into things like Tesla, MicroStrategy, CleanSpark. In fact, my MicroStrategy position is far larger now than my Bitcoin position, but I blame options because of that. They made it happen that way. But do you guys have any stock equity positions out there? Mando, you first.
Honestly, I have some single stocks, but I generally, because I don't actively manage my stock portfolio as much as my crypto portfolio, I generally look for trends in stuff. So I moved quite big into Indian stock ETFs, just because I feel like that is a long-term trend, which I can just let it be. And I feel as though it's more difficult for me to look at single stocks in that market. Other than that, like, I am heavily invested basically in US tech and Indian stocks. Those are my two major plays. I did buy earlier, middle of the way through last year. I bought a lot of commercial real estate when it was getting absolutely hammered, but I kind of took off that trade towards the end of last year. So I'll look at like certain sectors when they look really beaten up, and then I'll get involved, but that's more for a trade. If you're talking about the stuff that I look at, it's I'm generally looking for longer term trades because it's not something that I actively manage as much.
Super interesting regarding Indian ETF stocks. I do know, and I did look at them last year because India is the fastest growing place on the planet, but they also have another problem. Because the middle class is growing so fast, there's not enough cash. So they're also printing a lot of money. Are you not concerned about the ruble, coming down, the rupee, in terms of weakness, which will compress the price action on your ETFs?
You can have currency delta neutral ETFs. I actually haven't. I haven't really looked into done that as much, but I could very easily look to do that. Yeah, if you print money, normally the stock market goes higher, but I agree that there's obviously a currency impact, and the dollar's been relatively strong. But yeah, maybe I should look into hedging that a little bit more.
CTO, Any stocks?
Yeah,
in your
I'm
bag?
very interested in all the tech stocks. I mean, I feel that even if you just have like one stock, it's fun to take part in all the society shift that is happening, because of course crypto is one part of the society shift, but other part of what I call era digitalis is kind of created by these companies. And if you have just a little bit of stake, it works the same as with Bitcoin. No one ever understands crypto or Bitcoin until they buy a little bit of Bitcoin and start paying attention. And I feel it's the same with stocks. If you own a little bit of the stocks in these companies, you start reading their annual report, you start listening, you start understanding more of the global shift that is happening in the society. And I really feel more and more interested in many of these stocks. I feel that a lot of the big tech stocks could continue to perform very well, and I'm interested, and I have positions in several of them. I've also started paying more attention to smaller stocks. I don't think I can mention them here because it's very regulated here in parts of the world, that if you kind of mention a stock and price moves and you have exposure and so on, that could be a problem. So, but I do think that there is surprisingly much opportunity also in smaller stocks, actually. More than I realized before. So because one problem when we start getting like sizable portfolios is that if you're only in crypto, your entire portfolio is correlated. If Bitcoin dumps tomorrow, all the altcoins are going to dump as well. So unless you want to start shorting with half the portfolio and to going long with other portfolio, your entire portfolio is kind of very correlated. While if you have one portfolio that is crypto, one portfolio that is tech stocks, perhaps some portfolio that is commodities, if you're interested in that, you have lesser correlated assets, and you can start playing those separately. But that's probably isn't applicable if you're just starting out. If you have if you little bit of money, because then it's too much work to track everything. But as you start getting more sizable portfolios, diversification can't really happen only in crypto. You need to be in stocks also, and perhaps other asset classes. So that's
the next question was actually about a little token which we will skip just in case we get CTO into trouble for mentioning it. But there's a lot of other strange concerns are popping up around the world. People see the insane money printing happening, and everybody in many markets, UK, Australia, Netherlands, they're getting very fearful about fiat on-ramps being shut down. The whole vendetta against crypto and really controlling what people do. Do you believe, I'll give this to CTO first, do you believe the governments around the world could actually shut down all fiat on-ramps to prevent citizens from buying crypto? Or is that just the toothpaste is out of the tube? There's no way of stopping this. People will always find a way, whether it's a black market in Nigeria or something else, to get access to crypto. Do you have any point of view?
I think sadly they could kind of screw it up for the little guy. Like they could make it so complicated to send money into the real crypto, not the ETFs. The ETFs will now be accessible to wider audience one way or another, but the real crypto, where you control your own keys and everything, the banks could go together and say that now we're not going to permit any transfers to these illicit, shady places. Or even if they're not shady, they could say that we don't have the manpower to sort out what is permitted or not, so we're just going to stop all the transfers. And then if all the banks do it, it's going to get really complicated. People with a lot of money, they will sort it out. No problem. They will find, the company in Switzerland or something who permits this, and they will do the due diligence and check that this is legit, that is not legit, and so on. That makes sense on larger transfers. So the big guy will have no problem getting money in and out. But the everyday investor could actually start seeing more of this problem. I hope it don't happen, and I don't think it will happen in the end. I think reason will prevail. I don't think it's going to be, we're going to end up like that. I think this would be a mainstream technology, just like 5G, internet, TCP/IP or anything else. Everyone will take it for granted in another 10, 20 years, and no one will remember how much against it they were back in the day. But so I don't think we're going to end up there, but it could happen. 100% it could happen.
Mando, any Orwellian fears?
I don't think that. I agree completely with CTO. I think the worry here is that it becomes more centralized rather than gets shut down. I think what they'll do is they'll basically say for anti-money laundering rules, which they're already kind of doing in Europe, like having your own wallet may not be allowed, or you may have massive restrictions on what you can do with your own wallet. So they'll make sure that all this DeFi stuff is done via, I don't know, exchange, and that may be seen as safer, but it requires more centralization risk. Like you saw what happened with Gemini, right? Like if you were in Gemini Earn, you thought you were getting yield, and actually you got rugged. So I think it creates it's just way more centralization risks, I think, throughout crypto as we start to do this, particularly because I don't think they're going to bring in like the same sort of insurance they do for banks. Like they'll basically make sure you do everything on an exchange, and if an exchange goes down, that means it's going to be even more painful. So I think that will be kind of the worry for me there. And I think that is what's going to happen. I live in Europe. I think I probably have a few more years. I think MiCA's coming in. It's not being enacted straight away by all the different countries, but we probably have a few more years of like being able to do stuff with your own wallet with complete freedom.
And tapping into that question, does that mean you have a go bag and a plan that maybe 3 to 5 years from now you may have to go to a jurisdiction that's friendlier?
Yeah, I have a few different places I can go to. No, I like my life in Europe. It does suck that would happen. Yeah, I have considered getting citizenship in different places as well, but like, it is just one of these things. Like, it does kind of suck to be in Europe. I think Europe has kind of led. They had this policy of leading the way on regulation, which has been a strange one because the US has basically done no regulation. It's just done regulation by enforcement and said, oh, we don't need to update rules which were written 100 years ago. The SEC's got this covered, when they clearly don't. At least the UK and the EU have started to put in regulation, but the US regulation is kind of strict, and being able to do anything is not great. So like, yes, it allows for more clarity, but it's also not great. So then you've got a small number of nations, mainly in the Middle East, like Dubai is obviously, Singapore, Switzerland, which kind of have independence over their own laws, which are embracing it a bit more. But I do think in the next 20 years, we're going to head towards less freedom with crypto.
Even sooner than that. So I'm going to take a couple of quick comments from the audience, and then we'll do a quick wrap up. We'll try to keep this to an hour. And by the way, everybody, we are streaming to the 3 different channels. Mando's on X at @RectMando. Links are below in mine, but you probably find him on his own channel anyway. CTO Larson, we've been doing this for years together. And he is on his channel now as well. So let us know feedback if you like this format or not. Too, we're still going to rotate it, but the agenda will be rotated. So instead of me asking the questions, it'll be Mando or CTO. Now, first of all, quick comments. Thank you as well to the mods who are pulling in these questions. Matt C, 3 brilliant minds. Thank you guys. So Matt C loves this. Obsidian, really nervous about the future of my kids. Sometimes I share things and I have no filter, and I'm very nervous too. I would not I'm very worried about the revolution that's coming, AI, the transformations. It's going to change everything, especially extremely nervous about how children are being educated today, and I'm extremely nervous about the concentration of wealth amongst the 0.5% out there. CTO, you've got some kids. Are you nervous?
I think you're absolutely right, and I think it is correct to be nervous. And us growing up in rich, wealthy countries, I think situation could be massively different in 20, 30 years, actually. And Mando, you and I were both in Europe. Europe is kind of on the way to becoming a museum where wealthy Asian and American tourists are traveling to see the great things that happened in Europe hundreds of years ago, or thousands of years ago. And all right, but where are the new brave people who create the companies that become multinational successes today? They're kind of not here. And what does that mean? Well, that means that going forward a couple of decades, there will be less money coming in taxes. And there's something else happening. It's a digitalization. It's there, digitalis. The shoemaker across the street can't really move, but someone who has a digital company, they can absolutely move. And if people like that start moving out, that means that the tax revenues are also starting to moving out. And if there is not a mindset of attracting people, but rather a mindset that we will kind of, while there is still one person left, that person will pay for everyone else. That becomes a very challenging business model. If the country is like a company, that's not a sound business model. And we could get in a situation where we have a lot of elderly people, much fewer people in their kind of prime or revenue earning age, setting up big companies and making a lot of money. And this could, and together with AI taking over a lot of kind of the midsection jobs. And this could change in a way that I think most people can't really realize. I think countries in Europe could become kind of poor, apart from like the tourist revenue from the monuments and so on. But I think it can change a lot. I have 4 kids, and if I wasn't on the track of trying to make some own capital, taking own responsibility, having like own hard assets, if I was thinking I'm going to rely on the pension from the state and free stuff from the government in another 20, 30 years, that might not be there at that time. And I would be really worried. I think that we're in a time where everyone needs to take a bigger responsibility themselves, for their kids, because I think society could change a lot more than people realize. And it might not get pretty in the legacy countries, such as the one that I grew up. Anyone traveling to a country like Singapore or something, you get, it strikes you in the face what the difference there is. Or Dubai, in kind of entrepreneurships and so on. Yeah.
Dubai as well. And I must say,
yeah,
I violently agree with everything you said there, CTO. And I actually laughed about the depending on the tourists to look at what was built 2,000 years ago, whatever. Mando, what do you think about Obsidian's question? Should he be concerned? He is concerned for his kids, rightly so, or everything's going to be fine. It'll be a future of abundance because AI is going to make everybody rich. And the reality, my thought is AI is going to concentrate the wealth even further amongst those that control the AI, control the networks, control the bots. That's going to be where the wealth is concentrated.
Yeah, it's difficult to predict. Like, I have a young daughter. Over the next few decades, I think social and wealth inequality I can only see going higher. I think we will probably test the limits of like capitalism with the amount of debt that we have, and that, you could look at how empires rise and fall. You could say that this is maybe we've seen the peak of the US empire, and that's probably that shift in world power could be bad for everyone. It's not just like it can be replaced. You sometimes see periods of retrenchment, and we kind of go back as a society when world powers fall. But I also think we live in the best time ever for humans to ever have existed. So I think it's crazy when you ask your grandparents or even your parents, like, the things that we take for granted that they didn't take for granted. I think everyone always is fearful about the future, but I'm also incredibly optimistic. I'm incredibly optimistic in like the things that humans create given resources. I look for people like, Elon, who like has these crazy ideas about how to push forward the human race. And I feel very hopeful about those sort of stuff. So I'm not a pessimist about the human race. I think I'm always optimistic about what we can achieve. I think you should always be investing with the mindset that the world could blow up, and what the assets do you want to own in that scenario. And I think that's why a lot of us are drawn to crypto as well. But at the same time, I'm maths. I think we are living in an incredible time for humans, and it will only get more incredible with more time. A lot of this is about perspective, in my opinion.
It truly is. And I remember as a kid, all I had as books was 10 encyclopedias. That was it. And they didn't last too long. And then you had to get more. But imagine being a kid today, you have everything at your fingertips. And it's completely mind blowing. Shout out to B-Man63 for being here. He's loves the guests on this channel. Solar, Bitcoin, and coffee. Just curious. This is a financial kind of question. Just curious, if somebody has $30,000 in cash and their bills are $6,000 a month, do they need more than $30,000 in cash to be able to stay afloat without being too risky, and also trading, asking for a friend, not financial advice, etc.? The important thing about this, people always say you need to have a 6-month buffer. I call it a mattress, to be able to cover your expenses. So if you're burning $6,000 every month on bills, technically 6 is 36,000. So you'd be a little bit light on that 30,000. Do you guys think in terms of those dimensions for solar, Bitcoin, and coffee, in terms of what does your mattress look like, or what type of mattress would you advise? Mando.
I think that's probably a good way to look at stuff. At the same time, I think you can be in liquid investments that get you decent yield in this environment. So even like cash style investments, there's various different, like even stablecoin style investments in DeFi, which can get you 10, 15%. And that might not seem that great, but over the medium term, that can really start racking up. So even if you're in cash, I would advise yourself to get yourself into liquid, cash-like investments. Treasuries only 5% right now, nearly. Like that's a crazy time to be just having money in your bank account. Like, so you still have upside. I think I don't know what the average return has been on the S&P. I think something like 7% over the last 100 years. 8%. And right now you can get you can get 5% on treasuries. It's not the worst thing to be in. So I think just make sure you're just not in cash. You can be in very liquid cash-like securities, which get you a decent yield.
Well, we just found out that Warren Buffett, Berkshire Hathaway, is sitting on $190 billion in cash. And I'm a very big believer that historically, if you look at the amount of debasement over time, it's 12 to 14% debasement per year for the average fiat on the planet. So holding fiat long term, I believe, is a bad idea. But there are very clever things you can do. Even yield on things like Solana. I made a video about you buy it at $8 and you're getting 7 to 8% return on that. The results get pretty crazy when you look at the current price. So, CTO, any recommendations for your safety mattress if you have one?
Yeah, I mean, no one, I think, will successfully invest if you need the money to pay the bills tomorrow. No one will be able to stick to any strategy if you have like the knife on the throat like that. You have to save up some money, and it has to start feeling like it's a game almost. Like you have some money, you follow some strategy. You can't really feel that I need to make money trading tomorrow to buy milk. No, you're not going to make it. Save up money first. And it's like, people say it has to be money that you can afford to lose. And it's true, because otherwise you won't be able to stick to your strategy. Whatever strategy it is, you will panic and sell every dip in the uptrend instead. That's the only thing to add.
In fact, I'd like to double tap into that, because that is one of the things I find very important. The more mattress you have, the more diverse revenue streams you have, it gives you more comfort to take on more risk and weather more storms. Like imagine you're in the middle of the Atlantic Ocean, just outside of Portugal, where Mando is, and you've got this boat that is unsinkable. It's not called the Titanic, of course, but you're much more confident in the storm than if you're in this tiny little boat that could be overwhelmed by one wave. And I think everybody, what I'm saying is kind of a bit cryptic, but it's so important. Have a big mattress. Never feel under pressure that you have to sell the bottom, because that is very, very costly. So please take that down as a big, probably lesson of the day. Andrei Sazonov, Black Shirt Monday. Thank you for all your work, guys. Black shirt, black as a brand. And I like to keep things very simple. Yeah, I remember as a kid, I used to watch these movies where the people would have the closet with all the same shirts, and that's kind of like me.
Yeah.
Anyway, Nigel, what would happen to all holders once central banks realize they need to get Bitcoin to fund nations? This is the game theory question. Mando, do you think about game theory and central banks adding? We saw Swiss National Bank last time we spoke. Thinking about it? Thoughts?
Yeah, as I said last week, when it's going to be when, not if, this is going to happen. It's very, very clear. Like everyone else is starting to accept Bitcoin is like gold. Central banks will start to do it. They will eventually face democratic power to have to do it. You'll start to see some of the smaller ones do it first. But then I can imagine some of the bigger ones FOMOing in. It is an incredible asset to own versus gold. So I think there is a little bit of a first mover advantage with this sort of stuff. So I do think there'll be a lot of different people that will experiment with it.
Interesting. I'm learning how to put comments up. So guys, if you know how to do that, feel free to do it as well. Good advice. CTO, do you think about the game theory and a central bank or more institutions buying Bitcoin? We saw last week as well, Square, which is the block, Jack Dorsey's company, 10% of all profits will go into their DCA. They already have about 10,000 Bitcoin on the balance sheet, if I'm not mistaken. Thoughts?
Yeah. Oh, absolutely. This kind of things always feels impossible. It feels like, that will never happen, right? But I think a lot of people had kind of that aha moment already last cycle. Like if 2 cycles back, it really felt like we were a bunch of nerds sitting here and no one, will take it seriously. But then suddenly it comes like Elon Musk, PayPal, government start talking about it. El Salvador, a whole country, a president start talking about a second president. And it's like, oh, wow, yeah, this could actually happen. And absolutely, I think it could happen. Suddenly comes one major traditional country with like a little bit more daring leader, and they do it. And then the second country could do it, and the third country, and then they start panicking. Like, why do we have 0% digital gold when the others have 5%? Perhaps we should at least have 1%. And then they start. It starts changing. Yeah, it could happen. Absolutely.
One final question, which I don't actually understand. Many heads asking for your YouTube channel. It would do well. I think that is for Mando.
Yeah, I don't have a YouTube, unfortunately. I'm only on X, and I have a daily newsletter if you guys want to follow that, but mandominutes.com. But
exactly.
Maybe I have to go on YouTube. I don't know. I never have.
By the way, Mando Minutes is something I read. That's how I got to know it. It was funny because I was reading Mando Minutes for a long time, and then all of a sudden, Raoul Pal has both of us on at the same time. I was like, oh, Mando. Amazing. So, and X, many believe, will be kind of the future of streaming too. So Google, watch out and stop playing scam ads on YouTube. I mean, I had a call with Google last week saying, come on, guys, 3 years now I've been asking for this. It's incredible. And a big thank you to Jeff Hammer, The Great Escape, and Obsidian. Of course, you could be on Mando's channel or CTO's channel. If not, their links are below. Please follow them. Great stuff, great people, great knowledge. That conversation today took a few twists I did not expect. Any closing thoughts from either of you, CTO? Your Era Digitalis is on point. What would you advise for the world?
Yeah, think in wilder outcomes. I think if looking back, those of you who are as old as me, if you kind of rewind your life, I don't think that you thought we would be here today. If you look at how the world operates, what people are doing today. And it's going to be the same. Even the wildest prediction, I think, will be outperformed by reality. It's going to go further. It's going to be wilder. AI is going to go wilder. The society will change. We will get more digital than we can imagine. Like digital ownership, crypto will become bigger than anyone thinks. And open your mind to wilder scenarios. Then it's perhaps difficult to predict exactly which company will be dominate, exactly what will happen. That's just difficult to predict. But think wilder. So open your mind more and act accordingly. Don't do the mistake of thinking that staying in the current lane is a safe choice, because I don't think it is. I don't think it's the white collar job in some company. I don't think it's safe. I don't think that's a safe choice, even though it feels like it now. Open your mind, study capital management. Think, how do I take own control about my future? I think that's the safer choice. That's my closing thoughts for today.
Mando, any closing? By the way, first ever comment that my volume is too loud. That's
Oh, really?
Never happened before. Never happened before.
It's probably ironic. Yeah, I love that from CTO. Take more risk. I always say that. Take more risk. You only get to live once, so just take more risk. I've done it several different times. You can't obviously, if you're like living paycheck to paycheck, I think it's more difficult. But yeah, I just think people take wildly too little risk with their lives. So I agree with what CTO said.
Awesome. Well, thank you, everybody. Have a great week. Next week we're back. We're rotating the channels, so I think either way we'll be back doing this the same way. But Mando, why don't we put you in control next week?
Sure, I'll do the agenda. Why not, lads?
Yeah, we just pull out Mando minutes and run through that, which is always awesome. And thank you so much as well, CTO and Mando. Have a great week, you guys. Markets are a little bit weak right now. Bitcoin's a little bit down, but we'll see what happens with the ETFs this week. It'll be interesting because psychologically, you saw the dip, you saw people lose interest, and then you saw Bitcoin rise, and then people get interest. And as I think, Mando, you said at the very beginning, price. Isn't price the best advertiser for Bitcoin? Price action. So thank you, everybody. Have a great week, and I'll see you all later. Bye-bye.